Hey everyone! Welcome back to the channel Think Like Pro Billionaires. I am Charlotte, and today we're diving deep into one of the most powerful topics that can completely change your financial future: how to invest for beginners in the USA. If you've ever wondered where to start, what to invest in, or how to grow your money smartly without feeling lost, this video is for you. By the end of this video, you'll know how to build a simple, solid investment plan for yourself, step by step. Let's get started. Part Meg, why should you invest? Let's start with the big question: why invest at all? In simple terms, investing is putting your money to work for you. Instead of letting it sit in your checking account doing nothing, investing allows it to grow over time through compounding returns. In the United States, people invest for many reasons: building wealth for retirement, saving for a child's education, buying a home, or simply gaining financial independence. The earlier you start, the more powerful your money becomes thanks to compound interest. That's when your earnings generate more earnings. But yes, every investment involves risk. You can lose money if the market drops or if you choose poorly. That's why the key is to set your financial goals, define your time horizon, build a balanced strategy. Well, go through each of these today, step by step. Part 1. Laying the foundation. Before you invest a single dollar, you need a solid foundation. 2. Know your current financial situation. Take a hard look at your income, expenses, debts, and savings. If you have high-interest debt, like credit cards, pay that off first. No investment will beat a Xanhingtokos credit card upper. Also, make sure you have an emergency fund, at least yedek. That's months of expenses saved in cash or a high-yield savings account. 3. Define your goals. Ask yourself, what am I investing for? When will I need this money? If it's retirement, you're looking at decades. If it's a house in yedek, years, that's short term. Your time horizon determines how much risk you can afford. The longer your horizon, the more risk and growth potential you can take. 4. Open the right investment account in the US. You need a brokerage account to start investing. You have a few types: Chorsharuvmek, employer-sponsored retirement plan, often with matching contributions. Always take the match, it's free money. Traditional IRA or Roth IRA, individual retirement accounts with tax advantages. Regular brokerage account for non-retirement investing, more flexible but less tax protected. Popular platforms include Fidelity, Vanguard, Charles Schwab, and Robinhood. Just make sure whichever you choose is SIP-insured and well-rated. Part 2. Understanding investment options. Now that your foundation is strong, let's talk about where your money actually goes. 1. Make types of investment: stocks, equities. You're buying ownership in a company. Potential for high returns, but also high risk. Bonds, fixed income. You're lending money to a government or corporation for fixed interest return. Safer but lower returns. Mutual funds, ETFs, exchange-traded funds. These bundle many stocks or bonds into one investment. Easier diversification and lower risk than buying single stocks. Real estate REITs, property-based investments. Good for diversification but can require larger capital. For most beginners, low-cost index funds or IFs are the best place to start. 2. The simple strategy. You don't need to pick stocks like Warren Buffett. Instead, buy the whole market through index funds like SPY500 Index Fund, Total US Market Index Fund, International Index Fund. They give you diversification, low fees, and long-term growth potential. And always remember the golden rule: it's not about timing the market, it's about time in the market. The power of dollar cost averaging. Instead of investing all at once, invest a fixed amount every month, say 200. This way, you automatically buy more when prices are low and less when they're high. It smooths out your risk and builds consistency. No emotions, just discipline. Part choice, risk, return, and diversification. Every investment involves a trade-off between risk and reward. If you have decades before retirement, you can handle more stock exposure. If you're close to retirement or need the money soon, shift to safer assets like bonds or money market funds. A classic rule of thumb, your stock allocation 100 minus your age. So, if you're yeresun, you might keep around yotanasun in stocks and yeresun in bonds. Diversification spread your investments across different sectors, asset types, and even countries. If one area falls, others might rise, balancing your total return. Stay the course. Markets go up and down. That's normal. What matters is staying consistent. History shows the US stock market has always recovered and grown long-term. Parting smart investing habits. Let's talk about how to think like a smart investor. Make keep costs low, fees eat your returns. Look for funds with expense ratios below 0. Yerku Vanguard, and Fidelity are great for that. Yerku avoid hot tips and hype. If someone promises guaranteed returns or quick profits, it's probably a scam. Stick with proven, diversified, long-term strategies. Yerek reinvest your dividends, don't cash them out. Reinvest automatically to grow your holdings faster. Choice review, don't react once or twice a year. Check your portfolio and rebalance if needed, not every week. Overtrading usually hurts your returns. Understand taxes, know how capital gains, dividends, and tax-deferred accounts work. For example, Rothera withdrawals in retirement are tax-free, a big advantage. Part vets, getting started, step by step. Here's your quick action plan to start investing in the US. Set clear goals. What are you investing for? Build an emergency fund. Yerek, vets months of expenses. Pay off high-interest debt, always first. Choose your account type, choice how to make IRA or brokerage. Start small, even hisun, $100 a month is great. Take the diversified fund. Spink $100 Index Fund is a classic choice. Automate everything, contributions, reinvestment, and reviews. Be patient, true wealth grows slowly but surely. And that's it, your beginner's roadmap to investing in the US. Remember, investing isn't about luck, it's about time, discipline, and consistency. If you found this video helpful, hit that like button, subscribe for more personal finance tips, and comment below what investing topic you want me to cover next. Maybe Rothera vs traditional era? Thanks for watching, and until next time, keep learning, keep growing, and keep investing wisely.